this week's Dealing with Dollars, we're talking about something that has a huge impact on how much you pay for many of those big ticket items.
Yeah, and that thing is your credit score. And if yours isn't the best, you can improve it. WFXR's Evan Johnson talks with a finance analyst to find out how.
Having good credit can turn your dreams into reality, and knowing how to build credit is a vital part of getting yourself onto a firmer financial footing. Well, here to share some FICO building advice with us is finance industry analyst for Money Tips, Nathan Grant. Nathan, it's good to see you again.
Happy to be back.
So for people who may not understand what a credit score is, will you just briefly explain that to us?
Yeah, basically the relationship with a credit card holder and the credit card issuer is a relationship of trust, and if you're borrowing money, the better the relationship is, the better your standing is in that relationship, the better your future credit can be. And that's what credit scores are all about. They're a way to kind of determine where you stand. And so the good thing about it is no matter where you stand, if you're new to credit, you have bad credit, or you have pretty good credit, it's always like square one for making positive steps to improve that. And I think one thing that's important to remember right now is there's not much that the individual consumer can do right now to combat things like rising inflation and the changing economy. So credit score is one of those things that actually is in your control. You can actually start making progress today if you want to.
What's the first step for improving your credit score if that's your goal right now?
Yeah, so obviously paying off debt is going to save you money, but also having a good payment history is a huge part of what goes into your credit scores, especially if you're avoiding late payments and stuff and you have that good credit history. So you obviously want to pay down your debt. And another big factor that relates to the debt itself is what's called your credit utilization. And that's basically the percentage of your overall available credit that you're using. The higher that percentage, the worse it's going to be for your credit score. So it kind of goes hand in hand as while you're paying off your credit card debt, you're lowering that percentage, and that helps increase your credit score. And one thing that's important to remember is if you pay off a credit card and you're like, finally, I got it all paid off in full, you might be tempted to want to just close the account. I don't want to use this card again. But if you close a credit card that's in good standing and you have that good payment history, that history is coming off, and your payment history is a big factor that goes into your credit score. So really want to think about possibly not closing that once you pay it off. Just put the card away if you're worried about being tempted. But then you have all that payment history still helping. And if you think about it from a credit utilization perspective, the minute you close that account, your total available credit goes down. And even if your remaining debt remains the same, it brings that percentage up, so it's going to affect your credit scores negatively.
And since this is your area of expertise, Nathan, I've been seeing kind of online people saying there are ways to get negative markers off your credit report to boost your credit score. Do any of those things work? Things such as, contacting your credit card company and disputing a lot of these things. Does that actually work?
Well, obviously, if you have made a late payment, that's your responsibility that you made. But if it's your first time, it's definitely worth calling and trying to see if you can get that one removed, or at least prevented from being sent to your credit reports, because it never hurts to ask. But the other thing to remember is a lot of times you might see like credit repair companies and they're saying like, oh, we can help fix your credit. None of those companies are doing anything that you couldn't do yourself. So a lot of times it really does just start with contacting your issuer, trying to work things out. A very important thing to remember is just trying to avoid those late payments and avoid debt being moved to like collections and stuff like that, because that's going to really damage your credit scores. Even if you obviously want to pay the most over your minimum payment so you can pay off the debt faster and not pay so much for interest charges. But as long as you make at least the minimum on time every month, you're going to keep your credit scores in good standing as you work on those other factors like your credit utilization.
All right, some great information there, Nathan. Thank you so much. Nathan Grant, finance industry analyst for Money Tips. It's always a pleasure having you here. Now, if you miss any of Nathan's tips today, we've got them posted for you on the Dealing with Dollars page. Of course, you can find that at WFXRTV.com. Back to you.